Hi there, welcome back. Very good afternoon. You're watching Market Fatafat with me, Kanishka Sarkar and Srishti Sharma. Well, over the next half an hour, we'll put the spotlight on top buzzers through the day. But before that, a quick look at the earnings of Motilal Financial Services. To discuss, it's been a slightly muted quarter, and to discuss what transpired in the quarter gone by, we are joined by Shalibhadra Shah, the CFO at Motilal Oswal Financial Services. Hi, thank you so much for joining us today. Well, let's start talking about your numbers first up. So tell us what drove the AUM expansion this quarter. Was it primarily market movement or genuine net inflows that you saw? And how much of this came from new client addition versus existing clients? If you could, help us give a perspective over there.
Yeah. Good afternoon. Thank you for having me on show. So on our earnings, what drove the AUM is, especially our asset and private wealth segments. They have given a stellar show. In fact, our overall AMC flows have been pretty strong. We did almost 14,000 crores of net flows for the quarter and added almost, 17 lakh new SIPs. And our market share there has actually, gone up sequentially also, where we are at, 8.3% flow market share, which has led to, increase in our AUM market share to almost about 2.6%. So that's one of the segment where, overall, in fact, last 1 year, our AUM growth has been, almost about 55-56%. Which despite market being, Nifty returns are zero last 12 months, still our AUM growth is on the Nifty zero returns, our AUM is growing by 55%. So that's where, bulk of our asset growth is coming on. And secondly, our private wealth segment, where again we have, stellar flows. Our net flow for the quarter was about 7,500 crores, which is up, almost 3x YOY. And there again, because of, a lot of family additions, we've been able to, capture the flows in the market. And that is what is driving our AUM. So in terms of mix, I would say 75% overall will be existing clients in private wealth and 25% would be new clients. So that would be the broader mix. And I explained about our AMC where we added, 17 lakh new SIPs.
All right, good to know that, Mr. Shah. Afternoon, this is Srishti also joining in. But with respect to the fair value gains, if we exclude the fair value gains, how much better have you done operationally? Give us some sense there and help us understand what really happened this quarter.
Yeah. So Motilal Oswal's, design is such that, on one side we have the operating businesses and the operating profitability, which we, separately classify. And the other side we have is, the treasury engine. The treasury engine is subject to, notional mark-to-market gains or losses in a quarter. So if you look at our operating profit, that number for the Q2 is at 554 crores, which is again an all-time high profit that we have achieved. While for the quarter, the treasury segment has reported, a negative mark-to-market notional loss of about 270 crores. But I think overall on a YOY basis, the overall operating profit has been flat at about 2% growth. That's because it's again the broking business is something which because of the overall last 8-9 months of the regulatory changes impact. That segment has led to YOY degrowth of about 24%, which is relatively still much better than the overall industry. But rest of our operating segments, which is our asset management, our overall alternate segment, our capital market, which is investment banking, and our private wealth segments, all in all, if we put this together, actually the operating profit has risen by almost 30% on a first half year basis. So that's how we look at the overall operational performance, all round driven. There's boom in the capital market across all the segments except the brokerage line item, which constitutes about 30% of our overall revenue mix.
Understood. But Mr. Shah, since we are talking about segments, let's also put the spotlight on housing finance disbursements. If you could give us some light on the growth outlook there, and how does asset quality look beneath the surface? Any early stress or slippages trends that you're spotting?
So on our housing finance segment, we are seeing now the growth journey really shaping up well. Our overall AUM has grown by 24% YOY, and our disbursements are growing at at about 50% rate. So we have crossed quarter two at 500 crores of quarterly disbursement run rate. So we have been investing in the sales side of business over last couple of years, and that's why we are able to see now the throughput of disbursements really growing higher, and resultant AUM growth at about 25%. In terms of asset quality, I think it's pretty robust. We our GNPA and NPA numbers stands at about 1.4% GNPA and 0.8% NNPA. And basically, if we look at all our numbers of 1 plus, 30 plus, they have come down YOY basis. So we believe, I think, with best in class asset quality, the growth journey is now really shaping up for this business.
All right, and along with that, Mr. Shah, help us with the outlook on the margins in the housing finance. Your outlook on funding cost, how are the spreads holding up, and in which directions will the margins be headed in the second half?
Yeah. So on that front, our rating is now upgraded by ICRA to AA plus, and we are amongst in fact the only now the capital market business, non-bank capital market business who has this AA plus rating. So while we expect a bit of cost of fund reduction on account of this as well. But however, our overall cost of funds on housing side has come down already by about 20-25 basis points on a YOY basis, and we expect further MCLR cuts to aid the cost of fund reductions. So we expect the spreads to be maintained or even better from here. So as our spreads have improved over on a QOQ basis, our spreads remains at 5.3%. So H2 we expect some bit of reduction on the cost of funds, which would aid our spreads, and our NIIs continue to be pretty stable at 7%.
Understood. Thank you, Mr. Shah, for taking us through that outlook and what went by in the quarter. Well, wish you the best of luck for the future quarters. On that note, we'll let you go.
To Market Fatafat right here on ET Now, show where we highlight all the buzzing counters in trade right now. Me and Kanishka are already there, and with this, let me also welcome Kunal Shah on the show, joining us right now. Hi Kunal, afternoon, and good to be speaking with you. Let's talk about the first counter that you have been tracking, and that is Shobha. Good moves today, but help us understand what exactly are you looking at when it comes to Shobha, and what are the levels?
So I think if you look at the Nifty Reality Index, that has just given us a breakout, and Shobha has been one of the outperforming stock in the entire space. On the technicals, the stock is looking for a good move on the upside, where on the weekly charts, the stock has been showing us the signs of a breakout above the falling trend line. And we expect this momentum to continue on the higher end, and that's why it's a buy for us. Whatever dips you are getting, we are seeing strong buying interest from the lower levels. So 1500 is a very strong support on the downside, so that should act as a support for the stock. Overall, I am expecting first target on the upside to be somewhere around 1750 and second target to be around 1800. So Shobha is a buy from the current level.
All right, so a buy call coming for Shobha from the current levels. That's Kunal's view. But moving on to another counter that is buzzing in trade today, that's Bandhan Bank. This is after a weak set of numbers that the company has reported. Its net profit has slumped 88% year-on-year to that 112 crore rupees level, as higher provisions and weaker income that hit performance. Net interest income that has fallen about 12%, as NIMs dropped to 5.8% from 6.4% earlier. Operating profit has also declined about 29% on a year-on-year basis, while provisions have nearly doubled to 1,153 crore rupees. Gross NPA ratio that has inched up to 5%, and fresh slippages have risen 43% on a year-on-year basis. So on the back of this weak set of numbers, the stock is plunging in trade today. It's down more than 7.5% right now. So yes, that's the reason why this one is in focus. In fact, going forward, the management does expect better income mix ahead and plans to grow segments and strengthen secured lending.
All right, that's about Bandhan Bank. But Kunal, let's talk about GE Shipping in today's trading session. Good moves, but what exactly are you looking at?
See, again, on the technical charts, on the weekly charts, the stock have been forming a high bottom formation. We have got a fresh weekly breakout into the stock. 1100 was the resistance zone, which has been taken out in today's trading session with volumes. So we expect the following week to continue the strong momentum on the upside. So this again continues to be on the buy side for us. Stop loss on the downside would be close to 1020, and I am expecting on the upside levels of 1220 to 1300 on the upside.
Right, that's about GE Shipping. Good moves in today's trading session. But let's talk about Navin Fluorine then. Very strong move in today's trading session. First, of course, is definitely the earnings scorecard, wherein the numbers have been way better versus the street estimates on a sequential basis itself. Look at the jump in their EBITDA. It's 19%. The profit has seen a jump of 27% on a quarter-on-quarter basis. But not just that, the management has actually gone ahead and raised their guidance with respect to the EBITDA margin. The guidance now stands at 28 to 30% versus 25% for the full year of FY26, and that's why 15% surge over here.
That's right. But moving on from Navin Fluorine, Kunal, you've picked out Canara Bank for us. It's up nearly 4% in trade today. Where do you see the stock headed from here on?
I think one thing is that for the next 1.5 years, PSU banks is something which one should keep an eye on. When the markets were volatile in the last 6 to 8 months, there were two indexes, metals and PSUs. They were doing quite well. So relative strength was clearly visible. And when the market settled down, these are the sectors which will continue to outperform. And that's why for all your viewers also, I recommend to have PSU bank Bs in your portfolio. Continue to buy them on any dips and accumulate that. You can have a good return in the next 1 to 2 years. Coming to the PSU bank space, I think Canara Bank again looks very strong on the charts. The support for the stock on the downside is placed at 125, and I am expecting eventually to hit its all-time high levels, which is close to 160 on the upside. So again, we have seen a sharp move in the last couple of trading sessions, so dips should be utilized as a buying opportunity. 125 is the support zone. I am expecting the stock to go towards 160 on the upside.
All right, let's watch out for Canara Bank. But Kunal, with this, we let you go on that. Thank you so much for taking the time out and speaking with us.